Hi guys, welcome back to my YouTube channel. So the tax year is now over, which means one thing: tax returns. Do you need to do one? How should you best do it? Well, don't you worry guys, because Joshua Tharby is here to tell you. So for the 2021 tax year, it ended on the 5th of April, which is literally just last week. So if you had income which needs to be disclosed to HMRC during that period, you will need to do a tax return. So if you've got trading income of more than £1,000, property income of more than £1,000, or if you've taken more than £2,000 in dividends, then you likely will need to submit a tax return to HMRC. If you've not previously submitted one, you can register online. You do have until the 5th of October of 2021 to do this, but I would definitely suggest that nobody leaves it till that last minute, because with tax it's great to get them in early so you can know exactly how much tax you've got to pay and you're not rushing around frantically at the last minute. So when you register for your self-assessment tax return, you'll receive a UTR from HMRC. If you are planning on filing your tax return yourself, you'll need your government gateway login in order to do this using HMRC systems, or if you're having an accountant do this for you, all you need is a UTR and you can pass it to them and they will file the tax return on your behalf. You will also need to prepare all of your income and expenditure statements if you're a self-employed individual, your business bank statements, any receipts you've got as well. All of those details, have them ready to pass to your accountant so that they can crack on and prepare your tax return for you. If you've previously registered with HMRC, they'll likely send you a letter either now or in the next couple of weeks saying that they'd like a tax return from you. So if you've previously registered, you do not need to re-register. You've got your UTR and you can use that to file a tax return for each and every tax year. So with a tax return, you can actually do a paper one or online. There are benefits to filing online in that you've got until the 31st of January 2022 to actually file it. If you are filing using the paper one, you've actually only got until the 31st of October 2021 to get that in. So it is a shorter filing period. But for most people, I would recommend filing online because it's a lot quicker and simpler. So before you start to prepare your self-assessment tax return, it's great to have all the information in one place. So if you've been employed, you'll need your P60, which shows your total income for the period. And also if you've got any P11D benefits, you'll need that information to hand. If you receive dividends from other companies or your own company, if it's in an ISA, that doesn't count. You don't need to put them on your tax return, but you'll need all your vouchers that show that any dividends have been paid. You also need all your self-employment income, so your profits there, you'll need the details of that. If you're in a partnership as well, you might need your partnership income or your share of your partnership income, which is what will be shown on your self-assessment tax return. And also any interest or savings income, such as from the banks. I know these days it's not very much, but if you want to have your tax return 100% correct, even the pounds and the £2 that you might be getting an interest need to be included on there. And also if you're a pensioner as well, any pension income would need to be included on that tax return. So it's great to have all that information ready, have it all in one place so that you can start to prepare your tax return, or if you're getting a professional to do it, so you can pass it to them. So if you're a landlord as well and you've got more than £1,000 in property income, so the reason it's £1,000 is that if you've got less than £1,000 of property income, you can claim the property income allowance, which exempts this. But if you've got more than this, it's not available and you will need to do a tax return. So make sure that you've got details of all of your properties. You'll need your mortgage statements, your rental statements, your management statements, so we can see exactly how much rental income you've got and then deduct all the appropriate expenses from that. So my tips for actually getting your self-assessment done would be to get all the information in one place. And then if you are doing it yourself, have an Excel, because using the HMRC system online, it's not great for doing any calculations or workings out. So you'll need an Excel to do your workings on, such as calculating your profit, if you've got the property business, what income is going into which tax year, because whether it's the cash or the accruals basis, you need to know which year it's going to fall into, and also your additional deductions, your use of home, all of these kind of things. Have they been taken into account in your self-assessment tax return? You'll need these and you need to keep them for at least 6 tax years from when you submit your tax return, so that should HMRC have any questions or want to inquire into your tax return, you've got your workings, you've got all your information there in one place, ready to give to the HMRC officer. So I'd suggest getting your tax return done as soon as possible. As a business owner or a property investor, it's an absolute must, because you've got your latest SA302 then, so when a lender is asking for this, you can give them your most up-to-date tax information, which is great. in getting mortgages through as quick as possible, and you've then not got to wait for your accountant to do your tax return. So act fast and get it done. For a lot of people, if you've got just employment income, it very well may be possible to do your self-assessment yourself, but we would never recommend this because there are exemptions that get missed time and time again, and having an accountant who does this on a daily basis, check over that, claim the additional reliefs where available, 9 times out of 10 it does save some tax at the end of the day, so it's very much a worthwhile investment. If you'd like to have a chat with one of the guys at JSM Partners about getting your self-assessment tax return done, you can do so. We'll give you a free, no obligation quote and see if we've got any pointers for you at the same time. So I hope you've enjoyed this YouTube video. Please do make sure you hit that like button if you've enjoyed it, and thank you very much for watching. Bye for now, guys.